Welcome back. You're watching Business 360. The IMF recently lowered its global growth forecast for next year to 2.7%. Based on key economic indicators, the IMF has said the outlook for G20 economies is a gloomy one. High inflation, weakening of the Chinese economy, and the Ukraine-Russia war are weighing down the world economy. Amid global headwinds, the Parliamentary Committee on Finance today sought views from the Finance Ministry and Niti Aayog on the roadmap to a $5 trillion economy. So what did the government tell the parliamentary panel? Top government officials have briefed the parliamentary panel on India's roadmap for a $5 trillion economy. Sources say the government has said the real GDP growth is expected to be between 6.5% to 7% in FY23. Inflation to enter tolerance band of 2 to 6% by Q4 of this fiscal. Urban unemployment rate, which is at 7.6%, to fall further by end of fiscal, and private capex cycle could commence in FY24. Among the headwinds to India's growth path, pressure on currencies to depreciate against the dollar will persist into 2023. Loss of world output and trade could impact India's growth. Continued high crude prices will dilute domestic stimulus to growth, and food inflation could worsen due to climatic conditions. Now, the timeline for India becoming a $5 trillion economy has to be postponed because India has lost 2 years of growth. The $5 trillion target can be achieved by 2026-2027. For this, 6.5% annual growth rate is needed, and inflation should be below 6% and US inflation closer to 3%. Now, what are the key reforms needed to cross the $5 trillion target by 2026-27? Officials have told the parliamentary panel that on the agriculture side, you need land consolidation, facilitating crop diversification away from food grains into edible oils. On the power side, increasing user charges, improving DISCOM viability and reliability of affordable power for MSMEs, improve capacity of state governments to undertake local infra spending, reduce compliance burden on MSMEs from state, local and union governments, focus on asset monetization and privatization, reduction of government debt stock and lower cost of capital. Now, these were some of the key reforms that the Finance Ministry briefed the parliamentary panel about, which could really help India's transition to a $5 trillion economy. Back to you. Now, the union government, we're learning, could reassess the national monetization pipeline goal, make it more realistic. Sources say government may reassess the accruals, may refocus on monetizing idle assets instead of running ones. Sapna Das joins us with the latest.